It is time for this week's Nebraska Soybean Board Weekly Market Roundup. I'm Bryce Duska today, filling in for Susan Littlefield. Two gentlemen going to join me here in a second to discuss what's been happening in both the grain and livestock markets. We'll get into all that, talk about the weekly move, plus what's happened in the month of May. We'll get to that, but first, a word from our sponsor, the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back to the Nebraska Soybean Board Weekly Market Roundup. You see the two gentlemen on the screen with me, and for our radio audience, we'll introduce them. Alan Brugler is here. He's president of Brugler Marketing and Management, LLC. Kyle Bumsted, livestock analyst, is here as well. He trades under Allendale. Appreciate you both being here. Alan, let's start with you. Want to talk about how the grains finished the week, but also bring up the fact that we're closing out the month of May. How did things finish here for May, for in particular, I guess, corn and soybeans, Alan?
Well, it was a pretty brutal week on the corn and wheat, for that matter. Corn sold off pretty much all week, and these were not small losses. They were 3, 4 to 8 cents a day. Bottom line is we did close slightly higher for the month as a whole, but basically the news is pretty clear here. Planting progress is at the 5-year average. The trade had been looking for it to lag behind. There's still problems getting that last 15 or 20% in the ground, and you'll probably have some kind of a yield drag from doing that. But rain makes grain. We're wet. We have very few drought problems. The planting progress is at the normal pace for the end of May, and exports slowed down with the higher prices that we had mid-month. And the market just kind of decided, hey, we're going to take money off the table here at the end of the month because things are okay for the moment. We gave back a lot of the gains. Soybeans, a little different situation in that we had a very large rally at the beginning of the month. We were still giving back this week, along with the stock market selling off and some other things going on. Generally there was a flight to cash as after the Memorial Day holiday. Wheat held up, got up into new contract highs in some cases, or not new contract highs, but new highs for the year on several of those wheat contracts. But again, we saw some profit taking coming in at the end of the month. The story in wheat is Russia took some frost losses that knocked the world export trade ideas down a little bit, allowed U.S. and Europe to rally. But you still have to make the sales. And Russia was getting some rain in the forecast for next week, which might allow them to replant some of the damaged areas.
Appreciate those thoughts, Alan. We'll also bring Kyle Bumsted into the conversation to talk about, we'll start, I guess, on the cattle side and then bring in lean hogs. Kyle, for the month of May, live and feeder cattle were climbing there, and then something happened here in the last week or so, right?
Well, that's right, Bryce. We did see August fats up $5.35 here for the month, although for the week they were down $2.67. We got up into some congestion areas there on the charts. That 182 to 184 area on the chart basically was kind of that area here. But congestion here we had from back during bird flu, erratic bird flu pandemic or whatever. But also this week in the headline, there was the ractopamine headline coming out of the Greeley, Colorado beef plant, and China suspending imports from that plant. Not too worried about making the export quotas. JBS, they're going to make those export quotas elsewhere out of other plants. So not too worried about that. Now, feeder cattle, though, that's where it gets a little bit interesting. Now, for the week, feeder cattle down $3.82, posted an outside week lower on the chart, and they were only up 90 cents for the month here of May. So we did see some sizable liquidation here, even though the funds weren't anywhere near record long in the feeders or the live cattle. We still did see some non-commercial liquidation this week. And the case of the cattle market here, we've seen this box beef market forced higher here because of slower production here. Our slaughter production has been between 5 and 525,000 head. And that's basically the packer forcing up the box beef market. Now, we're in a time frame here where I feel that the cash market here is going to take a step back, which it did this week. Everyone was anticipating 188 plus, 188 plus there in the Southern Plains there, Kansas and Texas, and we ended up trading a lot of cattle at 186. So that kind of coincides here with the board, and it's not going to surprise me if the cash and the board converge at lower money here moving forward.
Kyle, let's also bring up lean hogs. You look at the chart for the month of May, and it's kind of like limbo. How low can you go throughout the entire month, just steadily going lower and lower and lower? Any insight as to why that might have been?
That's a very good question. It looked to me just like long liquidation here. Those non-commercial funds, they were extremely long. They were close to record long there in the hog complex. And going home here on Friday, I wanted to give the listeners something, a bullish nugget here. Based off the weekly chart, we needed these July hogs to close above 97.22 in order to put in some sort of a reversal here on the weekly chart, but we just couldn't quite do it. Now, that doesn't mean we're not going to turn around and have some sort of a recovery rally, but the charts don't quite give us that sign just yet going home here this Friday.
Alan, I want to bring you back into this conversation in a second, though. I want to follow up with Kyle on, you and I talked, I think that might have been 2 weeks ago for a separate segment. We were discussing the grain market in particular and referencing the fact you brought up that there are some times we put our highs in for the month of May. As you look back for grains, Kyle, do you think that's going to be the case for 2024, or is it way too early to be able to speculate in that area?
Some think I'm crazy, but I think we've seen the highs for the year in November beans and December corn. Barring some crazy, geopolitical headline, which could happen, I don't know as the drought headline's going to do it. Every year I hear the same thing. This year's different. This year's different. It's worse this year than it was in 2012. And then when you hear them in the combine, I don't know where this crop came from. It's one of the best crops I've ever raised. So I'm leaning towards that fact that I'm going to stick with what I've always said. We rally for between 5 and 6 weeks in the spring on those new crop contracts, and we're right at that time frame here at that 5th and 6th week here, or right at that 6-week time frame where I think the rally is in. And I think the highs are in for December corn.
Alan, what's your take on that?
Well, the seasonal tendency is for those highs for November beans and December corn to be in the May, June, July period. So, and May is certainly one of those months. We did a lot of technical damage to December corn this week. Some of our value models suggested it should have gotten into the high 490s or 502, that area, and we didn't quite get there. So, I had some hope that we're still going to see that high later. But I don't like this technical action this week, particularly on Friday. We broke below the uprising regression channel support on Thursday, and the quants did not support it on Friday, which we would expected them to come in and say this is cheap after the break and we ought to buy it. Now, having said that, I still have in the back of my head this El Nino to La Nina transition, the weather switch that we're having and happening all in 1 year here in one growing season. And that's the weather fits that pattern so far. The wetness this spring fits that transition. And the key point is you would normally turn warm and dry in August under that scenario. Beans are a function of August for bean yields. Corn, a little less so. Pollination in July is probably more critical. But again, if we actually flip that switch this summer to warm and dry, you could see a second swing at those highs after the sweet spot, after the May, June, July period. I do note that typical spring low to summer high, if you assume that spring low was April 18th, we've undershot on the price changes, but we have hit the average number of days and the average number of new highs for a rally in the spring. So to that degree, I agree with Kyle that, we've probably seen it for right now. The bottom line is we need the price break to attract more exports, particularly on the corn side where we have most of the world market to ourselves for another 30 days. That won't be the case when we get into July and all the second crop Brazilian corn's hitting the market. And China is also going to start taking in Argentine corn in July.
Alan, let's stay with you. When we come back and open these markets on Sunday evening, going to be a new month here as we enter June. What are you going to be watching in particular?
Well, we're going to get our first crop condition ratings on Monday from USDA for this year. A lot of people thought it'd be last week because the emergence was above 50%. They didn't do it, but we will get them on Monday. Anticipation is that those are going to be fairly high because of the much wetter conditions here. The Surprise, therefore, would be if they're not as high as expected. Also, we're going to get the industrial reports, the first of the month, for ethanol production, corn use for ethanol, and also soybean crush. So we'll want to see if the crush estimates are as low in the official number. That is the USDA number, as what they were in the NOPA number. So a couple things to watch for there. Exports, of course, we're wrapping up the marketing year on wheat. We should start to see some price response or some export sales response to this break in corn, but that won't show up in the inspections probably. That's going to be more in next week's export sales report, which is on Thursday.
Appreciate those thoughts. Let's jump back over to livestock with Kyle. Correct me if I'm wrong, but as we were talking, you don't sound incredibly bullish for live and feeder cattle. Is that fair, Kyle?
That would be fair to say, yes. I'm not, and when I look at some things like this cash feeder cattle index, it looks like it's about ready to start rolling over when you look at that cash chart there. The cash market, cash index here on live cattle is going to be lower this week here. So it looks to me we could be putting in some sort of reversal here as far as the cash markets are concerned, or as far as the cash markets are concerned. Also here, I'm very concerned here as we've talked about some economic issues here. As far as consumer paying up for boxed beef, everyone's bragging about domestic demand, but I just don't see it. I don't see the export demand either. I'm not seeing a lot of shopping carts filled with high-dollar, high-end steaks. I'm seeing a lot of them filled with lower-end cuts and switching over to pork and chicken and things like that when it comes to the beef. And I think that we could be running out of gas here as far as the boxed beef market goes from a technical standpoint. I think that there's some more downside to come here in both the live and the feeder cattle contracts. And the sentiment there, let's face it, everyone was extremely bullish on cattle, and I think some folks might have bought the spring high here about a week or 10 days ago.
All right. Well, obviously a lot of factors to keep an eye on. Gentlemen, appreciate you both joining us. Unfortunately, that's all the time we have as we put a bow on the month of May, see what's in store for both grain and livestock here coming up in the month of June. This is our weekly Nebraska Soybean Board Market Roundup here on the Rural Radio Network.